Good morning. Welcome Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of November 10th, 2025. Let's get started. SEAF signals for this week. We got healthcare and technology getting retained, and we pick up consumer discretionary with a strong trading week. As you can see here, technology has fallen off a little bit with the 11 on the trading week here, bringing it up to a score of 13. Obviously still a SEAF signal as it's in the top three. And that's what, so what this model does well is it keeps you in ideas. Obviously, I have hindsight bias here today. I'm recording this on Monday. These numbers are through 11/7 of last week, but technology opened up high today. This model does a good job at times keeping you in signals a little bit longer to avoid some of this trading week noise. Because some of the times these flows, especially of the last year, had really strong inflows, outflows over the weeks, from week to week. We keep in this trade because of strong momentum on the tactical month and the strategic quarter, which keeps this score high enough to stay in. Obviously, it was 1 point away with taking a flip with materials, but again, this model isn't meant to. We've extensively tested. Hey, what would happen if we just do the trading week? And you get whipsawed way too often. Flows come in, flows come out. You really want to build this momentum over several time periods, because that means not only is money flowing in, but that money is sticky. And you want sticky money to kind of pick up these longer sustained trends. A couple other things to highlight here, seeing a little bit of life in financials and energy, both of which are now sitting in that neutral ranking, and then communication services and consumer staples sitting here at the bottom. Going into our heat map, to note for last week, overall, the 11 sector spiders had a slight outflow of 0.27%. 3 of 5 of those days were down days, which means we had outflows in 3 of the 5 days last week. And we're sitting about $8 billion off all-time highs in terms of the asset flows. We'll take a look at our chart in just a minute. Kind of wanted to highlight some things here. Consumer discretionary, 0.26 on the trading week, 0.25 at financials, and 0.25 for energy. So you can see these dark greens here. Overall, this is more or less aligned, which means we're trending in the right direction a bit with the technology. Had a negative 0.74% outflow. Again, seeing a little bit of a reversal today on Monday, so we'll see what this week looks like. And what flows look like for technology after kind of last week's outflow. Again, more or less red here toward the bottom with financials being the outlier, and seeing nice accumulation here for healthcare, as well as starting to pick up some accumulation here for consumer discretionary with a trading week of 1. Taking a look at our sector spider total AUM. These appears if you add the AUM of all 11 sector spiders, and you throw a 21-day moving average on here, we did crash below that. 21-day moving average, a little bit of a downflow coming into last week. We'll see what happens. The market is currently up 47 points here in the morning here when I'm talking. We've seen some really wide range days in terms of volatility for the S&P 500. So, we could end up down today or up much higher. Who knows? But as of right now, we are sitting below this 21-day moving average. And again, when we sit below the 20-day moving average, we tend to have price under appreciation. Now, we've had a couple of these check marks here. So if we do kind of cross back above this 21-day moving average and have a little bit of sustained, this will be a good buying opportunity here. So just we'll have to keep an eye on this. But as of right now, we're still negotiating that 21-day. We didn't get a clear breakdown enough to really say that this isn't a negative outflow situation, but we have had a bit of a decline going back, the last week or two. So it'll be interesting to see how this kind of resolves itself in the upcoming weeks. Heading into our rainbow charts, starting off consumer discretionary, which is 1 on the week, kind of shot up through. We've had a little bit of relative outperformance versus SPY. Overall, still in this sideways pattern for consumer discretionary. If we get a couple of weeks of this fourth quarter bump here, maybe a couple of weeks of inflows into consumer discretionary, get this thing to kind of have that sustained upper favorite and really kind of break through this box. We have a little bit of resistance on the relative performance versus SPY here. It will take some couple of weeks of sustained flows, but we are starting to see some accumulation through the strategic quarter, with that being a 3. Right now, consumer discretionary, our top SEAF signal. Healthcare. Healthcare's doing well. We're kind of really maintaining this favored territory. Last time we did this was in February and March of this year, and we did see some nice relative outperformance versus SPY, some sustained moves up. We are starting to kind of do that here. As we've kind of crossed through into this favored, a little bit of an uptrend in relative outperformance. We had a little stagnation sideways, but things looking positive for healthcare. I would like to really see this kind of resistance level on the relative performance versus SPY chart to be broken through, but we got a lot of room to run up here. So we can continue these sustained flows, really start to accumulate some assets in healthcare, and continue to stay in this favor. Positive things looking for healthcare. Technology. Data through. Data through Thursday of last week. But what we're seeing here is, again, still seeing mostly sustained, favored, big run up in relative outperformance versus SPY here. This is a giant move going back to April of this year, and a little bit of a downturn as we had a big, strong outflow. But like I said, I have a little bit of hindsight bias as I could look at the XLK chart for today, and it opened up higher. So we'll see. This could be a break. Like I said, really kind of tying into this chart here. If we get a sustained move back above this 21-day moving average, all this was a slight break in the action for technology, and this thing has room to go higher as long as obviously we see sustained flows. If this thing gets rejected on that 21-day moving average and we continue to slide, we'll see probably get technology cycled out, but technology is still a SEAF signal. The reason so is very strong accumulation on the tactical month and the strategic quarter, and if we can stay in this favor and it holds, there's no reason this thing can't continue to run. Now into financials. I wanted to bring up financials and energy kind of at the same time. We've got a similar situation here, both declining on the relative outperformance versus SPY, really going back a year, yearish, several months or so, seeing a little bit of life. Energy's a little bit above financials in terms of where it's at on its SEAF score. So, energy climbing up into neutral, and financials in neutral, but really just knocking on the door, kind of climbing out of a void. But we've seen little check marks here. We've had bottom out in relative outperformance versus SPY going back in the last year, both check marking out. What do we need to see? Sustained flows to get accelerated up into favored. We've seen it a little bit here. You can see financials. This acceleration up into favored got us going on the relative outperformance versus SPY chart. What did it not have? It didn't have this sustained time in favored. So we get the acceleration, we get that kind of momentum pumping up in the relative outperformance, and then we have to sustain. Financials did it from January up through about April. We've had that steady decline since. We didn't get that here, and that's what we need to see. We need to see the acceleration into favored and then it to hold. That has been the kind of the crux of energy going back to this last year here, is we've had the inflows. It has brought that relative outperformance versus SPY shot up, but we have not been able to hold it. That money flows right back out here. So it'll be interesting to see with energy if we can kind of continue to see this sustained movement here. But as of right now, really hasn't been there. So, nothing to do here, especially with energy. We've been faked out way too many times to say this is a good place for a leadoff. We are seeing some asset flows come in on the trading week, but we need to see those flows sustained. It's just, it has to hold. Otherwise, something we can't trust. And then last but not least, sorry, a little bit for the screen movements here. Just wanted to show consumer staples here at the bottom. Really strong decline in consumer staples. Really in that deep void here as the market's been kind of ripping since April. Staples is a little bit more of a defensive sector here in that deep avoid. We saw a little bit of a check mark here on some slight flow movement here, but otherwise strong underperformance relative versus SPY. Again, I would like to see some sustainment here in terms of getting down below that 21-day moving average and showing a little bit of weakness for this thing to really take off. Deep avoid here for consumer staples. Really nothing to do here. So that is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.